This video will be about the importance of drawing liquidity, and what I mean by that is positioning yourself with smart money so you are able to catch the expansion move. In this case, we had CPI today, and there was not any expansion. It was just consolidation entirety throughout the entire day. So, drawing liquidity is just whether price is going to go up or down. How do you understand if price is going to up or down? Well, there's a bunch of different signatures in price, no matter how you trade. I'm sure you guys have your own protocols, etc. But I was anticipating price to be bullish after the CPI drop. Even though we dumped like a lot from this CPI candle, I was anticipating price to at least come up to the 50% of this range. We fell short of it, but I was not anticipating this equal lows to get hit just because we already had the move for the day completed before the New York Open. So, what I was looking at was this 1 minute structure, and I'll show you guys why just because you have a certain pattern show up on your chart doesn't mean that you're on sides with the drawn liquidity. And this is a textbook trade for me. 9 times out of 10, this is going to work if the drawn liquidity is correct. Today, I was not. And that also, I went against my own bias today as well. So, this is the 1 minute chart on the NASDAQ. And we have our high from 833 over here. ES did not take this high yet. And so when I saw this SMT, this confirmed my bias. Just because you see SMT doesn't mean you immediately just take a trade. You have to wait for a certain signature of price and then you press your button. So what was I anticipating? We have a run on buy stops. We get a change in the stated delivery right here. We get our last up close candle close below. So that's our CSD. We get our market structure shift with this candle. And we also create a breaker. Why do we create a breaker? We have a high, low, higher high, lower low. And most importantly, we create a fair value gap throughout all of this. So when you have all of this happening, we have an order block. These last 4 down close candles is a breaker. We have a breaker, order block, fair value gap, market structure shift, and a CSD. So when I saw this, I was anticipating price to come down into this 5 minute untapped fair value gap. And like I said, I was not expecting this low to get taken. So if this would have been taken or tapped into, we were most likely going to hit this low eventually today, right? So I went against my own bias and I was offsides with the drawn liquidity. Even though this is a perfect setup, even with SMT, the drawn liquidity I was not on sides with, so the trade did not work. If I play price, you can see I got stopped out right there. And I was only trading 2 micros today just because the size was so large. You had to have such wide stops. So I only took a $136 loss here. But regardless, that just shows you the importance of having a great setup, but not the right drawn liquidity. And this happens countless times. A lot of new traders who trade ICT, they watch the 2022 mentorship, and they see this right here. We get a liquidity sweep down here. This is all in the 1 minute time frame, right? But regardless, this is my point. You get a liquidity sweep. You get your break of structure right here, market structure shift. You go, oh, look, fair value gap, order block. You place your order in here, stop below this last down close candle or the last up close candle, however you trade. And you're like, oh, I'm going to target this high. Why doesn't this work? Because price is not, you're not on sides with smart money. You're not on sides with the drawn liquidity. And just because your pattern shows up every single day doesn't mean that your trade's actually going to work. And that's what I struggled with for a long time personally. And the only way that you get better at this is identifying the drawn liquidity in real time and real time price action. And you just tape read over and over, paper trade, whatever you want to do. Use funded accounts, etc. But you have to understand where the market is likely to head. And guess what? There's some days where I have no idea where the market's going. And you have to just understand that you need to just stay hands off and either turn off your computer or set alerts and then come back after they go off. That's something I have to get better at, is walking away when there's price action like today. Even though I came out green, I definitely overtraded. And even though I didn't lose a lot of money on the trade that I was taking, or I got stopped at a break even. It's just that habit that's there, and I need to not. That just shouldn't. I shouldn't be doing that, right? And that's because I kept confusing myself where the draw on liquidity was. I knew that we weren't going to go lower, just because it's a Wednesday. We have bond auctions tomorrow. All that stuff matters, right, guys? Like, you can't just ignore red folder news. You can't just ignore volatility drivers. You have to understand that the market's going to do certain things on a time-based interval. And if you go through your chart every single day, let me see if I can find another one from today. This is just a perfect example of, I was actually anticipating to short this, excuse me, on the 5-minute time frame. This is a beautiful 5-minute setup. Once again, we have all these stacked lows down here, right? Clean lines like to become jagged, straight lines like to become jagged, whatever ICT said. So I finally saw this swing low, 5-minute swing low. Once again, from earlier today, that same 5-minute untapped or value gap. I was like, okay, this is a beautiful area for liquidity to get grabbed. This is normally a high probability reversal area if we do come down here. Guess what? We get a 5-minute break of structure. We get a 5-minute market structure shift. We get a 5-minute change in the state of delivery. It does not matter. The price today was just engineering buy side and sell side liquidity on each side and just destroying people who were trading options. That's all this was doing today. And I'm so glad I told myself not to take this trade, because I would have got smoked. And I would have had to have a 26-point stop. Personally, I don't want to take a $600 loss when I don't need to. So I'm so glad that I was able to stay out of this. And what I mean by that is, look, we have 3 forms of liquidity get taken right here. We get this big displacement candle back down. This is a 5-minute candle. We also have time starting to align. This is 1 o'clock. We get our market structure shift here. We get our change in the state of delivery, because this last down close candle closes below these 3 last up close candles. Now we have a fair value gap. We have another breaker. We have another set of an order block. We have engineered sell side. Even if you don't want to target here, you could be targeting low a day or just points, right? Just money, whatever you want to, however you trade. If you go to the 1 minute, you can see how this happened. You could see, oh, we're just repricing into this 1 minute, which happened earlier. This is in a deep discount, right? Or a deep premium, OTE. Nope, pattern fails because you're not on the right side of the draw on liquidity. And you have to understand that not every day is going to give you good setups. Like these trades are happening, and you can find scout moves, but even though you're getting the patterns that normally work on days when price isn't stuck in a consolidation market, right? Today was just complete consolidation. You're going to lose your mind trying to trade this. Every little move, every little low that you think should be protected or is protected on different days, you have to understand when to know your trading has to change, and that's one of the biggest things in this game. And most importantly, I'll say it again one last time before I end this video. The draw on liquidity is the only thing that makes your trades make you money. If you are offsides with smart money, you are going to lose every single time. And I was a pattern trader when I first started trading ICT. It took me a decent amount of time to recognize that the draw on liquidity is the most and single-handedly the most important thing that you have to learn. And thankfully, I am starting to get better at it. One more time, if you guys are not sure where price is going, just watch. Do not be forced. Do not feel forced to take any trades. SMT, time, nothing is going to save you if you are offsides from the draw on liquidity. I hope you guys enjoyed this video. If you have any questions, comments, or concerns, let me know in the description below. My Instagram and Twitter, my DMs are always open. I love you guys, and I'll see you in the next one.